Let's start, Melissa, with you about just what the takeaways, the key ones for you from Meta Platforms, because it was a lot better than the reaction that we saw from the likes of Alphabet and others.
Indeed. Thank you. It was certainly an interesting quarter. It was a solid one as well. I think we saw both, slight beats on both the revenue line and the operating profit line. In terms of the CapEx actually came in a little bit lower than initial expectations by S&P Global Visible Alpha consensus. And then looking forward, that CapEx is going to remain within the range that they had initially given, but at the higher end of it. So they didn't increase CapEx significantly for the rest of the year. I think the CapEx spend will come next year, but I think the way that the CFO described it is that it will remain disciplined and in line with how sales growth is trending. So I think net, that was a positive.
Sarah, what was the biggest difference in your mind between what was said from Meta Platforms and Mark Zuckerberg about their future plans, AI trajectory and whatnot, with what we heard from Sundar Pichai and Alphabet, given what they are going to do with AI, the spending that they're going to make, what they have to do with it? Why the dichotomy? Why the difference in reaction?
I mean, those are very different companies, right? And you have to remember that none of these companies are particularly new to AI, but Alphabet in particular has been in this space for so long. They bought DeepMind, they wrote the original white paper that's driven a lot of this sort of Gen AI craze. And so, it's not surprising to me that there's a difference there. The thing that was interesting to me is that we know that Mark Zuckerberg likes to spend money. We all remember the legless metaverse days, but the reality is that when the street likes what he's buying, they're much more generous about it than with things like the metaverse, where they just didn't believe him. And we saw that in the stock price.
Now, if you exclude Tesla, all of the Magnificent Seven members have surpassed earnings estimates so far this quarter. But the stocks, again, have reacted differently. So I'll go to you, Sarah. What are your expectations now when it comes to Apple and Amazon when they report after the close today? It's a double whammy after the close.
Yeah. So, I'm a bit worried that Apple is sort of overhyping its AI phone. They started, sort of leaking data and sending, letting developers take a look. The reality is it's already an AI phone, right? What do you think Siri is, or those photo slideshows that pop up all the time? So the reality is that I think that there's going to be sort of incremental change when that phone comes out later this year, which I think will disappoint the street a bit. I also think that, the new device sales of iPhone, which it counts for a huge amount of their revenue, aren't that strong. And the funny thing here is that these are all good problems for Apple. They already have AI in their phone, so their AI phone doesn't feel that different. They already are selling devices that work, and you don't need a new one, right? Remember when you used to get water in your phone and have to drop it in rice? Those days are over. And so the reality is that they don't have that forced obsolescence. They're already doing a good job, but the street doesn't want to know what they already did. They want to know what they're going to do looking forward. So I'm not sure that it's going to be the best quarter ever for Apple.
Melissa, that's the Apple side of things and the view from Sarah. Melissa, the other big AI-oriented player that's got so many other things going on these days is Amazon, and it's Alexa. I'm not going to say the name because I don't want to set off everyone's devices at home right now. But you know what I'm talking about. What exactly do we expect to see from Amazon? Cloud computing is still going to be a huge focus, but what about AI?
Amazon should be an exciting quarter. Everyone's been talking about AI and AWS and whether or not they're going to continue to see increased margins. Right now, we're expecting 32.2% margin in that particular business. But the more exciting story is probably around their retail business. The retail business has never really generated much of a margin, and that business has been increasingly getting more profitable. Coming into this quarter, we're expecting 5.9% operating profit margin, it's expected to get to just over 10% this year. And so it'll be really interesting to see if that trajectory is maintained.